2024 is upon us. Now is the time to make decisions for 2023's crop and protect this spring's investment. Let Advanced Trading help you create a marketing strategy to protect your investment and reduce market risk. For over 40 years, Advanced Trading's non-predictive approach has helped farmers secure and extend profits, regardless of market volatility. Our team is ready to help you tackle 2024's uncertainties. You never stop working, and neither do we.
Good afternoon, my name is Drew Moore. Today we had the February USDA WASDE report and a little bit of something for everybody today with the final results. Corn closing down 1 versus the March contract. Soybeans up 6 and all over the place today, and then March wheat ended up down 11. So a little positivity for the soy complex and a little bearishness for the the grain complex. And so I've got Michael Reginelli and Brian Basting in the studio with us here today, and we're going to go over some of the highlights of the report and look at what's next for price action here as we enter into kind of the balance of winter. So, Michael, first question for you. We also had CONAB numbers out this morning. Yep. How did the USDA look compared to those numbers that we saw earlier today?
Yeah, it was a surprise out of the gate. I think everybody was pretty shocked by the CONAB numbers. Pretty sweeping cuts for both corn and beans, and they've already been running lower estimates than where the USDA had been. So sure. I think that obviously gave the market a shot in the arm this morning, provided a little bit of support. USDA followed suit to some degree, but the big thing, like CONAB took 4 million metric tons off their previous estimate for Brazilian corn. And that's, now the spread at USDA also went down 3, but if you look at it, you're basically sub 114 at CONAB, you're at 124 from the USDA million metric tons. That's a spread of, 400 million bushels between the two. Right. It's a big deal on the corn side of things. So big variance there, pretty wide disparity. That's going to be something that we're going to obviously have to keep an eye on as we go forward. And then similar in beans, we saw some early strength. CONAB came in sub 150 million metric tons. That's down, I think, roughly 6 from their January estimate, I believe. Yep. It's below about 3.4 million below last year, and the USDA wasn't quite as aggressive. They took their Brazilian bean estimate down by 1 million metric tons to 156. So again, pretty widespread between the two that the market's going to pay attention to. One of the things, I guess, that jumped out to us, or two things I should say, they did take last year's Brazilian production up by 2 million metric tons. That's basically going to fold into the ending stocks. Basically means we got a better supply buffer in Brazil is what they're implying. So that helps that reduction for this year. And the other thing is Argentina. USDA left Argentina unchanged, I believe, on both corn and beans. Right. And Argentina obviously had a pretty devastating drought last year, significant reductions to their production. So if you take, like, on the bean side, for instance, if you take the Argentina and Brazilian numbers at face value today and compare them to last year, it's still like 22 million metric tons, or over 800 million bushels more in total supply if you group the two countries together than we had a year ago. So the market rallied on the headlines, makes sense, but at the same time, if you look at the bigger picture year on year from a production side, their net production in the southern hemisphere is quite a bit larger than it was a year ago. Sure. So something to bear in mind. Appreciate that. Thank you. Brian, what did the USDA say regarding wheat today?
Not a lot of good news, unfortunately, for the wheat producers, Drew, in terms of the news from USDA. Continued export competition. The USDA bumped up Ukraine exports 1 million tons compared to last month. Sure. They also increased Argentina and Australia each by 500,000 tons. So add those two together, it's 2 million tons. That's almost 75 million bushels more export competition between now and the end of May. So in the absence of Chinese buying, and I'd add, Drew, that USDA cut Chinese imports today by 500,000 tons. So are the Chinese done buying? We'll just have to wait and see. But of course, we did have a good spurt of buying from the Chinese back at the end of 2023, and that helped the market. But without Chinese buying, Drew, I'm afraid U.S. is going to be the residual supplier. And the other thing is these northern hemisphere crops, whether you're looking out at Kansas, Oklahoma, moisture conditions far better than last year. Sure. Good moisture in Europe, good moisture in Russia, Ukraine. Not a lot of crop concerns around the world at the moment.
EU wheat futures, I think, contract lows today, I believe, right?
Everything is
Yeah.
the proverbial searching for demand, folks. It just feels like the
Yeah.
market is grinding lower, as Michael said, whether it's in Europe or whether it's here in the U.S., trying to find some demand, and it's rough going at the moment.
That residual supply comment might not just be wheat either from an application
That's
standpoint.
very true.
Right.
The way
Very
things are
true.
shaping up.
Absolutely. Michael, what the current fund position, and estimates, and where do we go from here? I mean, we looking at net short across grain, soy, coming to some levels we haven't seen in quite some time.
Yeah.
Maybe since 2016-ish type time frame, and what's the prognosis as we move forward?
It's the funds, like you said, are heavily bearish at the moment. We'll get an updated commitment of traders tomorrow. Looking at the kind of estimated daily runs compared to where we netted out last Friday, I would tell you ballpark funds are short roughly 300,000 on corn contracts. As a rough estimate. I think the record low was in 2019, maybe April of 2019. It was 322, 323 short, something like that. So we're getting close to it. Also running, we're short 120, our estimate, on beans at the moment,
Sure.
70,000 contracts on the wheat side. So like you said, negative across the board. Fundamentals, like Brian said, you can run corn, beans, and wheat. Their fundamentals lean heavy. So it makes sense that they're positioning this way. As we're kind of creeping towards that, on corn specifically, towards like what we call record short levels, I guess questions are, how much more dry powder do they actually want to throw at this?
Sure.
It's kind of one of the lingering questions out there, because if you're looking for a reason to kind of bottom stop this thing or find some support, obviously those short positions will get covered in at some point. It doesn't take much bullish news, not that we're seeing a lot of bullish news out there, with the exception of CONAB this morning, to spur a little bit of short covering rallies, evening up positions. But it leaves the market susceptible in times where there's not a lot of volume to sporadic rallies, when those when they're leaning as heavily short as they are right now.
Sure.
So yeah, question still though on are we going to move towards a record net short on corn? And it's within striking distance.
Sure. Seems likely that they may report that tomorrow.
Yeah.
Brian, we've got the February Outlook Forum that the USDA puts on next week, right? Any estimates on what they're going to say, or general bias?
Well, the bias feels like on this end, Drew, that we're going to see higher carryout numbers for corn for next year, as high as 2.6, 2.7. I've seen some higher numbers than that,
I have to.
2.8 to 2.9. So it's going to be a function of what USDA adopts for trend yield, obviously their acreage numbers and usage, but regardless, it sure feels heavier potentially than even this year, as Michael said. At the moment, feels very heavy.
Sure.
Beans, I think it's going to be higher than this year's carryout also. A little bit more uncertainty about the beans, but feeling is well over 400 is not out of the realm of possibility in terms of a 24-25 ending stocks number for the U.S., and it's 315 for this year. So both those feel heavy, Drew. I think as a producer looking forward, when I've traveled the last 2 months across the Midwest, Minnesota, Indiana, Illinois, is a feeling there's a fair amount of unpriced 23 crop out there, and I just strongly encourage the viewers to get control of those bushels. By that I mean get a floor underneath this market, leave the upside open. As Michael hit the nail on the head, if these funds were to come in, there could be bumps, but I just can't sit here and say when or from what level. But each time the market grinds lower, it gets heavier. And the other part about that, Drew, just briefly, is that if the ownership of 23 is quite high, percentage-wise, then they're unable to focus on 24.
Right.
So we really want to get those 23 bushels under control now. We know what our margins are on those bushels. Let's lock them in. Let's get a call option in place. Volatility is still relatively cheap out there.
Absolutely.
To cover a problem that may develop in Argentina, or beg your pardon, in Brazil or wherever, a demand surprise. But get a floor underneath these markets and then turn our focus to 24.
Yep.
Yeah.
Absolutely.
Yeah, and on the forum, I'll tack on real quick. I think we're almost positively going to see higher beans, lower corn acres, And the interesting thing is, depending on what they print, there's more volatility or variability, I guess, in the bean number. I totally agree with Brian. We're coming out of several years, though, of like 5% stocks to use or a little bit less. If the USDA is confirmed at 315, and we've been, I think, internally 319 for a couple weeks now, so they're coming up to what we've been kind of expecting.
Right.
That it's going to be quite a bit higher than 5%. And honestly, if we go print a 400 to 500, we could easily be, at 10% stocks to use. That's a supply burdensome market for soybeans. Yeah. So, it's not just corn that's in the crosshairs here. Even on a lower acreage threshold on corn, we could see this carryout balloon beyond what we're seeing this year.
Right.
It's not a sub, 1.5 billion bushel carryout, sub 10% stocks use market on corn either. It's also not to say, though, that we can't get a surprise, because I think it was, Brian might remember, I think it was 2021 where the forum was heavily bearish, and it was, they were, I think it was like 94 million acres. They were printing like a 2.5 or 2.6 type carryout. Yeah. And then, we ended up catching fire like late summer. We planted way less, 3 million acres less. The yields got worked down to like, I think it was 171, something like that. And we ended up with more demand, so we bumped the demand numbers, and all of a sudden, markets went up. We tightened up that carry out, and that was kind of the start of the tightness that we've experienced the past 3 years. So, we do have to take those numbers next week with a grain of salt. And the March 31st planting intentions report should be a better look at what farmers intend to do. But it's something the market's going to have to pay really close attention to, I think, over the next couple months, because the way that it all shakes out is going to be obviously critical to next year, given that we're carrying out higher amounts of stocks this year than we have in several years.
Absolutely. Throw a trend line yield in at 178.5, 178.4 on throw in 92.5 million acres, and we're at a 2.9. Or at least that's what our balance sheet shows right now for next year. So it's a little concerning here as we move forward.
I just tag on to that, Drew. You had made a real good point. Even if we drop that corn acreage down, which Michael hit the nail on the head, I think we are going to see a lower corn acreage number from USDA. Yeah. Boy, if anything told us in 2023 that these genetics are certainly stout and getting better in terms of how the yield can respond. So, every year is different. Every 2024 will throw us some curves that we never saw coming. But just defend that balance sheet, because it certainly, as you said on paper, Drew, looking at a much higher potential carry out for corn, and as Michael just highlighted, a much higher potential carry out for 24, 25 beans.
Right. Yeah. Right. Absolutely. Guys, any closing remarks here before we break?
I just encourage producers again, Drew, to get control of their bushels for 23, focus on 24,
Yep.
Use flexibility in your marketing. Leave that upside open, but get a flow underneath these markets. You'll feel much more comfortable in terms of managing price movement. It's been a challenging few months here, but it's also been some opportunity there too, in terms of risk management, taking care of your balance sheet, defending that balance sheet. Yep. But it's really, really critical right now, because some of those 24, 25 numbers may make these prices today seem high a year from now. We just have to cross each bridge as we get there.
Yeah, Brian said it well. The only thing I'd tack on to that too that goes in tandem with it is, from a marketing standpoint, we do have to put, in my mind, some protection into this year's crop to begin protecting next year and get the focus on that, because, a lot can change between now and then. There's no guarantee that next year, that this year's and next year's carryout estimates are gonna pan out.
Right.
But if it does, DEES 24 and NOV 24 futures feel lofty at the moment. Obviously you're not cheering that prices go down, but the fundamental picture is bearish. So I think you do have to start making plans to at least protect your operation. And the other thing, like Brian said, with the 23, given how unmarketed it is, I would caution, there's probably a lot of open basis contracts in the country, and I guess the last thing I'd leave it with is, as we develop into more of a carry structure market, which is different than we've had the past 3 years, you do got to be, if I'm a grower, I'm a little cautious about rolling forward and devaluing my net basis, because it's not doing anything to protect downside risk. So Brian hit it on the head. Do something to at least protect the downside, so the baseline that you can manage your operation from, and then there's ways to participate in upside from there. But I think you just got to be cognizant of your marketing plan, probably as much as any time in the past several years.
Absolutely. Well, thank you guys both today, and hopefully everybody caught our 11 o'clock live show with ATI Pro Media. Tommy Gersafi, Connor Bridgman, and Brady Huck reporting live from 10:55 a.m. to 11:05 and giving a snapshot of the USDA live as it comes out. And thank you for joining us. Please feel free to like and subscribe, and have a great day.